In our previous video, we outlined why we are starting to feel excited about Bitcoin and more specifically Bitcoin mining stocks. So go check out the last video to get an overview of this thesis. Today we're covering Riot blockchain, which is a Bitcoin mining stock. As a miner of cryptocurrencies, the company takes some of its mined digital coins, Bitcoin, and sells them to generate a revenue. So when the Bitcoin price goes up, each singular sale is worth more to this company's bottom line. The company is extremely tethered to the success of Bitcoin. The company will succeed if Bitcoin succeeds, and the company will fail if Bitcoin fails. By taking the base case for the year 2021, the year Bitcoin hit its all-time high, we can see Riot's revenue exponentially grew during that time, reaching a total of 1,665% increase from the prior year. This is a reflection of how tethered this company is to Bitcoin and the Bitcoin price. The company also reduced its net loss for that year. Now you may be wondering, why is this company losing money? Well, Riot's strategy is quite simple. It's basically buying more and more miners and trying to become the biggest mining outfit in North America. So Riot expects to increase its fleet by at least 3 times what it currently is in January 2023, which means that it can basically mine more Bitcoin, which allows it to sell more Bitcoin on the market once the Bitcoin price has reached substantial levels where they can see a profitable return. So most analysts believe this company is trading quite undervalued, around 95%. Earnings are forecasted to increase by over 100%, which, the Bitcoin price is very volatile. But if the Bitcoin price does start trending up, we can see its revenue, such as we saw in 2021, be very explosive. And that's really what we're trying to capture in this trade. Based on its peers, it's also trading at very good values, and its metrics and balance sheet look much better than its peers, which we will cover. Some risks to be aware of: this stock is highly volatile, which will come as no surprise to yourself. Shareholders have been diluted massively in the past. This is why getting in too early can be very detrimental in these type of stocks. And if we look at the insider selling of the past couple of months, it has been quite significant. But if we look at the price levels they have been selling, those have been substantially higher than where we are currently. So what I'm trying to say is, no one is at the moment selling at these levels. Maybe they already feel that it's too low. Given the fact that it's expanded and is expanding, the price to book value of this company looks very good, which is basically the total assets minus the liabilities and divided by the share price. So its book to price value is under 1. So the stock is actually trading cheaper than what they would get if they just sold everything. So that's always a great indication. But as mentioned previously, the company is at the moment unprofitable. And the forecast by analysts is that it is looking to increase by over 100%. And as we saw in 2021, when the Bitcoin price did run, this stock ran even harder. So really, again, that is what we're trying to capture in this trade. And the balance sheet looks very good for this company, especially compared to its peers. So it has zero debt because everything is self-hosted, and they own all of the equipment, mining equipment, and the facilities. So they basically hold zero debt. The chart for Riot looks pretty disgusting, but this is really where you want to be buying to get the most out of your investment, right? This isn't a company that we're expecting to hold for like years and years. Really, we're trying to capture that delta between when Bitcoin starts to move again and when this is reflected in the profit that this company is generating. As you'll see on the screen, I've outlined a few price levels that I like the look of and which I will probably be scaling into. Now, as always, this isn't investment advice, it's just what I'm doing. But I want to make everyone aware that this stock is highly, highly volatile and risky. Now, it is not a good idea to just jump in at any level, like let's say today's level, with your full 100% allocation that you wish to put in this trade. I think the most prudent strategy with a stock like this is actually just to scale in, as the whole thesis is basically based on Bitcoin. And now Bitcoin has never faced an environment that we are in currently, with high inflation and a looming recession, and a global recession at that. So you have to be prepared mentally to be actually holding the stock for quite a while, I imagine. It may be that the Fed pivots. It may be that the Fed pivots and they start do quantitative easing once they find out that they are breaking the economy, and that will again, of course, send inflation roaring. But that will also mean a lot of money being thrown around. So yeah, I'm just saying, be prepared to hold the stock. Be prepared that it may cut in half. It may go down another 90%. I have no idea. But I think the risk to reward ratio is looking quite attractive for this stock.